Morning, everyone, and welcome to Messer's continuing webinar series on Wednesdays as we provide some additional benefits to our agents in the field as we try to increase share knowledge over various products. We're very happy today to have a great carrier with us. But before we get into that presentation, just want to remind you guys about Messer's lead program. If you're not taking advantage of that, please reach out to one of the marketing directors here, and we'll be happy to fill you in on that. Also, if you're contracted with Messer Financial Group, you'll have access at no charge to our CSG quote tool. Provides the opportunity for you guys to look at Med Advantage, Med Sups, some ancillary products, and PDPs. Again, that's of no value, or excuse me, of no charge to you guys, but a tremendous value if you're in the field and trying to find out who has the most competitive rates and for what plans that you may be interested in. Just a little background on Mutual of Omaha. They're one of the nation's oldest insurers that we have. They filed their articles of corporation, I believe, back in 1909, and we're there along the way as our needs changed as a nation for insurance, making some adaptations to their policies and procedures during the two world wars, and also we're there to help the government as we put into place Medicare back in the mid-60s. So they were selected by the federal government to help administer A and B. And then as we rolled into what we now recognize as standardized med supplements in the 90s, they've been there every step of the way. So we're thrilled to have these guys with us today. The sales director who will be joining us here in just a second, Mr. Jason Weber, is going to go over some of their great products, give you guys some sales strategies, some opportunities that they see in the market, and then we'll hold our questions till the end, and we'll try to address those in the last 15 minutes or so of the webinar. So, Jason, are you ready?
I am all set.
All right. So, ladies and gentlemen, without further ado, our good friend from Mutual of Omaha, Jason Weber. Thanks for joining us, Jason. Let's have a great webinar, and let's support Mutual of Omaha. Thanks, everyone.
All right. Thanks, Jeff, and thank you, everybody. Really good to be with you today. I know you guys are busy, so just the fact that you're carving out a little bit of time to listen to what I have to say, I sincerely appreciate it, so thank you. As Jeff said, my name is Jason Weber. I'm the sales director for the Medicare supplement product line at our company, and here's what we're going to do today. We're going to go through all the product specifics, what we bring to the table, some of the levers, I like to say, that we're pulling as a company to encourage agents to write our product. We'll go through all that today, but as you can see on the slide here, I kind of want to do a different perspective as well. I want to take the Med Sup as our foundation today, and I want to show you guys how you can maybe turn the corner to grow your business in a substantial way. There's a lot of competition out there from an insurance company perspective, but also from an agent perspective. You know, everybody's calling on people that are turning 65. People are getting inundated with postcards and phone calls, mailers in the mailbox, trying to earn that individual's business. But some of the things that a face-to-face agent can do to separate away from the pack is to grow that relationship in a different way, right? And again, we're going to use MedSup as our starting point, but some of the things that you can do as a face-to-face agent to earn that individual's business and have a more substantive relationship with that person so that you're not only going to get that MedSup sale out of them, but you're also going to have that person as a client for life, and you're going to have a much stronger relationship with that individual, and hopefully you can get some additional sales out of that as well. So that's really the game plan today. Before we even dive into the product specific stuff, I just want to talk about the senior market in general. You're looking at a bar graph right here, and I think the statistic is almost cliche at this point. We hear it so often, but it's nevertheless true, and that's why I want to start today with it, and that is that 10,000 people are turning 65 every single day, okay? That's what this bar graph is showing. It's showing it from an annual standpoint. What are we? We're only, 1, 2, 3, 4, 5, 6, 7 now. It's 2018. 7 bars in from the left, but probably far after all of us are out of this career, that number is not going to slow down. What that means is there is a huge prospecting opportunity that the senior market presents. And specific to MedSup, MedSup's a great door opener product, right? Let's talk about another product for a second. What's another great product for a senior market prospect? Final expense, cancer, critical illness. There's a lot out there. But if you start the conversation with one of those products, say you fill out a fact finder, you identify a few needs, you're going to present a solution. One of those, let's just say final expense. Let's start with that. There still is an underwriting process with that product. So we got the buy-in from the prospect. They're not a client yet. They're still a prospect. We got the buy-in. They say, yes, this is exactly what I need. We get out the insurance company application. We start filling that out, and we say, yes, I got a sale, right? Sounds good. Well, we submit that application to the company, and we find that they're not insurable. They get declined. Well, that's a very frustrating experience, right? The prospect, still a prospect, not a client yet. They don't get the product that we've sold them on from a value standpoint. We're not getting paid on that. We haven't gotten a commission because the application was declined. We're investing a lot of time in that individual, and we have to go back to the drawing board, figure out a plan B solution. And let's be honest, at a certain point, they're going to stop returning our phone call. Maybe we're not going to get that second appointment to even present that plan B solution. So don't start with those products, even though a lot of those are definitely on the drawing board for us. Maybe we're kicking those ideas around in our mind as we're driving over to their house to do that presentation. Start with MedSup, especially if someone is in their initial enrollment period. It doesn't matter what prescription drugs they're taking, pre-existing conditions, how tall, short, heavy, skinny they are. They can't be denied that product, okay? That's what the Medicare supplement market specifically is going to present to you. It's a great door opener product. You have a guaranteed solution that you can present to that client. So start there, follow up 2 weeks, 2 months, 6 months later. You saw a lot of additional needs on the table. Some of those I already talked about, and we're going to talk a little bit more about those later in the presentation today. But start with MedSup. It's a great door opener product, and that's something that you can use to build initial rapport with that prospect, make them a client, and then you can pivot to some of those other product sales later on down the road. Okay. So that's my starting point. Now we're going to talk about some of the product specific stuff, and this is just a fun slide that I created myself. And what are we talking about today? We're talking about MedSup. MedSup is a commodity product. Jeff kicked off the call today talking about standardization that happened a number of years ago. And MedSup is not like that final expense policy. It's not like that cancer policy. It's been standardized. And the fun analogy I like to use is that, it's kind of like when you go into the grocery store and you're buying a gallon of milk. Are you buying one brand or are you buying the other? I mean, milk's milk, right? It tastes pretty much the same. What we're trying to do is we're trying to save a quarter. That's very much the same idea behind MedSup. Another analogy, it's like your car insurance. Why would you ever pay more than you need to when the benefits provided are the same from company to company? It's not like a Mutual of Omaha Plan G is going to be any different than an Aetna or a Cigna or a number of other companies' Plan G. It's all the same. So I'm going to talk to you guys today about where our prices are competitive. It's very important as an insurance agent that you know that. If you want to promote Mutual of Omaha, I'm going to talk about a few of our fun marketing and incentive programs today. If you want to take advantage of those, but you're marketing your business in an area where we don't have an especially competitive rate, well, that's not going to be an efficient process for you. So we understand that the rate is important. We try to make our rates as competitive as we can make them. We're going to talk about some of that today. And then, like I said at the beginning, we're going to kind of use that as our starting point, and we're going to talk about some fun marketing strategies as well. Also, as Jeff said, just a real quick 30-second commercial on our company. We've been around in the MedSup space for a long time. In fact, as long as anybody else has. Over 50 years. We just celebrated our 50th anniversary a few years ago. We've been doing this since MedSups were first available in 1966. We offer a product everywhere except for Massachusetts, so every other state we do. But really the big things I want to highlight on this slide are the last two bullets. So we're the second largest carrier overall, and we're the largest agent sold med supp carrier. And that should mean a lot to you because, well, let's talk about the big kahuna out there, United Healthcare, right? They're a monster. We're not going to catch them, but I really don't think we ever plan to. They've really grown as a company marketing directly to consumers. That's why you see so many United Healthcare commercials on TV. We do some of that. We have a direct-to-consumer division as well. But really where we've grown our distribution is through agents selling our products face-to-face with their clients. And we take a lot of pride in that fact. We have grown a great partnership with agents. And that's why that final bullet should really mean something to you. Everything that we do, whether it's making our sales tools top-notch, like our e-app, whether it's our incentive programs, like our broker bonus that I'll talk about a little bit later, we really want to create programs that are going to help you grow. And if you grow, you're going to sell more of our products, and that means that we're going to grow as well. So we take a lot of pride in that fact, like I already said. Once again, I just want to thank you for the business that you're placing with Mutual of Omaha. It's been a great partnership. And that last bullet, the largest agent sold carrier, we definitely do not want to give that away. Okay. So if there's anything that we can be doing better, Jeff said we're going to open up for questions at the end. Don't hit me too hard, but if there's anything we can be doing that we're not currently, please let me know. Again, we do thank you for your business, and we want to make sure that you're going to continue giving that business to us. This slide is talking about our financial strength, and this is important too, especially with a commodity product like med supp. The plans are the same, the benefits are the same, the rate's important. The financial strength of the company is important too, and that's why I included it here. I actually ripped this screenshot right off of our website, mutualofomaha.com. This is absolutely something that you should be sharing with your clients as well. You take a look at the med supp market today. I mean, just versus 18 months ago, it's a lot different, right? It's much more competitive. It's saturated. A lot of people seem to think. There's a lot of small regional players out there. Maybe it's a company that you or your clients never heard of before, but they have a smoking plan G rate, $95 a month. It's hard to say no to that, right? And that's why a name like Mutual of Omaha, it's a brand that a lot of people trust. We've been doing this for a long time. We've been doing some rate adjustments that are in line with what our customers can pay. We want to keep that product as affordable as we can make it. These are people that they're now entering a new phase of life, right? They're now retired. They're living on a limited income. It's stressful. Hopefully they did their homework and they saved enough. They're enjoying retirement in a way that they always envisioned. They want to place their business. This is the idea here. They want to place their business with a company that they know and they trust. That's what Mutual of Omaha brings to the table. But also they want to buy their product from a company, and they want to do that in a way that they have that peace of mind, right? They want to be assured that when they submit a claim, that thing's going to be paid very quickly, and it's not a company that's going to get out of the market anytime soon. And again, that's what Mutual of Omaha has done. We've been doing this for over 50 years, a very financial and stable company as well. And on that point, I want to talk a little bit about the Wild Kingdom. You think of, I guess, a senior market client, someone that's, that baby boomer we talked about at the beginning. What's the first thing that comes to mind when they think of Mutual of Omaha? It's probably this, right? Well, this is something that we're very proud of as a company. It's probably the single-handed biggest thing that we've done as a company to grow our brand. And I bring it up in this presentation because the people that are most familiar with the Wild Kingdom, it's the med supp policyholders. It's the people that, grew up in the 60s and the 70s watching this on TV on Sunday nights with their family. There's an emotional connection to it. Again, it's something we're very proud of. So talk this up as well. You're quoting a number of different companies. They're all within $2 or $3 of each other. Very competitive, like I just said a slide ago. What does Mutual bring to the table? The financial stability. It's a name that they trust. Oh, and it's that Wild Kingdom company from a few decades ago. So that is something that we're very proud of as well. All right, so now we're going to dive into the product-specific stuff. And I already jumped a slide ahead. I'm getting ahead of myself. I mentioned before that we offer a product in all states except for Massachusetts. That's why you see that state blacked out. But we do offer plans everywhere else. There's a few things that I want to talk about on this slide. First of all, the color. So if you look in the bottom left-hand corner, you can see that we offer our MedSup products on Mutual of Omaha Company paper, but we have 3 affiliates as well. United of Omaha, Omaha Insurance Company, and United World. A newer agent, and hopefully we have a few on the call today, they may say, why do you guys do that? We just talked about how, clients love your company, the Wild Kingdom, the financial stability, all of that. But they get their policy and it says Omaha Insurance Company, and maybe they don't immediately make that connection that they're buying a Mutual of Omaha Company product. Why do you guys do that? Well, the whole idea there is that we want to make our products as competitive as we can make them. Let's take Texas, for example. Texas is a great state for us. We have a lot of distribution in that state, a lot of agents selling our products. It's a very populous state. A lot of people retire there. It's very important that we keep that product as competitive as we can make it for as long as we can keep it that way. So today, Texas, we do that with United World. We rolled that product out, I think it was either January or February of last year. Before that, it was Omaha Insurance Company. And if we have any veterans on the call, you would know that, the MedSup market is very cyclical in nature, right? Where you're marketing your business, maybe Aetna's hot this year. Next year, after a rate adjustment, maybe Cigna's the next player. Hopefully, Mutual of Omaha is. Well, the idea there is that, once again, we want to keep our products as competitive as we can make them. And when we first roll a product out, it's going to have a great rate to it. But after a few years, rate adjustments are going to come into play, rising healthcare costs. The block is getting older, so claims costs are going to increase. And if you're looking at a quote tool on a website, that company, let's just say Mutual of Omaha, is slowly going to tick its way down to the point where we're just not making any sales anymore. So one of those levers that we can pull as a company is to file a new product, and that's where we use our affiliate companies. Whenever we release a new product, and they're all state specific, the next company that we use is going to be one where we haven't had an active block of business before. What does that mean? We can be a lot more aggressive with the rates because there's no claims experience that we have to take into consideration when we price the next product, okay? So that's why we use our affiliate companies. Pay attention to the company that we use in the state in which you market your business. And again, we try and keep the products as competitive as we can make them. Every few years, hopefully, we can release a new product so that you have more new competitive rates from Mutual of Omaha, okay? The next thing I want to talk about on this slide, and then we'll move on, is the household discount. That's that either 12% or that 7% that you see underneath the plans available in each state, okay? And this is one of the key differentiators that all MedSup companies are bringing to the table. That is not standardized like the benefits are, okay? You see a 5% discount out there. You see a 10% discount out there. We do a 7 and a 12. I'm just going to talk about our 12% discount. And real quick, I'm going to send this PowerPoint out to the group at Messer, and hopefully they'll distribute it to everybody dialing in today. I know we're recording the call as well. In addition to the slide deck, I'm going to send a few PDFs, and you saw that little spin animation because on this PDF, it's actually on the back side. If you've ever picked this up at a convention or a conference, hopefully it's a familiar piece for you. But yeah, you just flip it over and you can see all of the important information on that household discount right on the back side. So the 12% discount, real quick, beyond the fact that it's a little bit more cost savings for your client relative to the 7%, the 12% is also a lot easier to qualify for. It's a much more liberal definition. So how it works, if your client is living with a spouse or a domestic partner at the same address, they qualify. That's it. Hands down, there's no additional questions to it. But it doesn't end there. Let's say they live with a sibling, someone they're not involved with in some sort of intimate relationship. They can still qualify in that regard too. But if it is that scenario that we're looking at, we just ask that they're at least 60 years old and they've been living together for the previous 12 months, okay? Again, if it's a spouse or domestic partner, that's it. There's no age requirement. They could have moved in last week. They would still qualify for the discount. It's only if they're not in an intimate relationship that we apply those 2 additional requirements. And again, those 60 years old, having lived together for the previous 12 months. Okay, so that's really important. The household discount amount, that is not the same from company to company. The way in which someone qualifies for it, that is not the same either. So just make sure you understand Mutual of Omaha's household discount. Make sure you're asking the question because if they qualify, we definitely want to add that discounted rate to the quoting tool when we're showing them the Mutual of Omaha premium, right? Again, this is a commodity product. The rate is very important. So we want to make sure that we're bringing that to the table, okay? Here's a look at our price competitiveness. It's kind of hard to see, but if you look on the lower right-hand corner, that maybe navy color, yeah, it looks like it's a dark blue. Hopefully that color is coming across on your monitor. That means we have the lowest rate in those areas versus all competitors that have a MedSup rate available in that zip code, okay? And then as you go up, you see that lighter blue, the aqua, and then you get into the greens and some of the warmer colors. Those are some of the areas where we're just not as competitive versus some other companies. And those are probably some areas in which we'll look at later on in the fall to release some new products, okay? So if you're marketing your business in those areas where we're not as competitive, stay tuned. Hopefully we can do something about that a little bit later. But, you know, this is not a whole lot of details, very high level, but this is a great piece to use if you want to focus on Mutual of Omaha this year. Maybe you want to put a mail campaign together or something like that. Understand where we're competitive. You definitely want to focus on those areas with a commodity product like Medicare Supplement. I also have the rate adjustment history on here as well. And this is just as important. You know, we do a lot of conferences. I know Messer does a great AEP kickoff convention in the fall up in Charlotte. We hear a lot, and I say I'm a sales rep on the sales team at my company, and, you know, we have a number of individuals on the team. And, you know, we see a lot of competitor presentations, and it seems like everybody's always reluctant to include this slide. This slide is very important. Again, these are people that are buying this product. They're now retired. They're living on a limited income. Sure, we want to get them an affordable product today. We want to keep that product as affordable as we can make it for the long haul, right? You know, there's a lot of competition. I already alluded to that. A lot of no-name companies, maybe a company we've never heard of. They have a really great rate. It's hard to say no to that. But what does that company's track record look like? What is that rate increase going to look like if there is one within the next couple of years? Or are they going to be at 8%, 10%, 12%? Hopefully it's a lot lower at 3 to 4 to 5. And that's something that Mutual of Omaha brings to the table. Again, we've been doing this for a long time. We have a lot of experience. This is just the national average, and you can see at the bottom there, it's just on the F&G plans, which are our most popular plans. But definitely show them this information. And then if you go onto our broker portal, Sales Professional Access, you can get a document that shows the rate increase history, and it's broken down by plan and by state. And that is a great signifier of what the product increase is going to be like in the coming years, right? So show that information to them, just as important as this previous slide, okay? So make sure you're talking about that as well. All right, so that's all the MedSup product stuff I have. Now I just want to talk about a few sales ideas. These are not groundbreaking necessarily. I'm sure we've all seen these, you know, in one way or another. But again, this is something that you can do as a traditional face-to-face agent to grow additional rapport with your clients. Start with a MedSup, but again, MedSup is a very competitive, cutthroat market. There's a lot of people calling on the same prospects. This is a way that you can kind of distance yourself from the pack, grow additional rapport, add additional value. You're going to get that client for life, right? So here's just some of those ideas. The first one I have, don't forget about the ancillaries. We talked about this at the beginning of the call. MedSup's a great door opener product, but don't stop there. For example, there's a lot of call center agents. Let's just be honest. Call centers have really grown. They've grown with our company. But what are those people doing? They're calling from halfway across the country. They're never going to call on that individual again. They're just going to get the sale and they're going to forget about it. So what you can do to distance yourself from that call center agent is find solutions for some of those additional needs. And there are a lot of them, even for individuals that are now in their retirement years. It's the golden years. Hopefully they, I said this already, but they've done their homework and, they're going to, enjoy retirement and all of that stuff. But, there still are some additional needs. What are those? Let's talk about critical illness. The name of our portfolio is Critical Advantage. And the idea here, we're just going to skim these right off the surface, not dive into the weeds on them too much, but just talk about them from a conceptual standpoint. The idea with a critical illness policy is that there are a lot of very severe diseases and conditions that maybe our MedSup client will find themselves facing, and their MedSup policy is not going to provide a whole lot of substantive solution for that specific scenario. The idea here is that critical illness pays a tax-free lump sum cash benefit upon diagnosis. So it's not like a waiting period needs to be satisfied. The condition doesn't need to grow in severity. They get diagnosed with a covered condition. We're talking cancer, heart attack, stroke. For the critical illness product, there's, I think, 13 covered conditions. We're looking at blindness, deafness, major organ transplant, Alzheimer's, which is a very good one to have. If your client gets diagnosed with one of those conditions, we're going to pay that lump sum benefit, and it's paid in cash, so they can use it for whatever they want. Let's say, for example, they have to go to a specialized facility that's not within their local community to receive care. That's an expensive plane ticket, right? They got to maybe pay for a hotel if a family member is going to accompany them on that trip. Well, that's something that a critical illness policy can be used for. That's not something health insurance is going to be used for, right? It's going to pay for the care, but what about all those indirect expenses that come along with that? That's where a critical illness policy is really going to shine, okay? Just real quick on our product. So again, Critical Advantage is the name of the portfolio. We have a full-fledged critical illness policy that covers those 13 conditions, but we also have one that just covers cancer or heart attack and stroke, or you can combine and get a product that covers all three of those. The idea there is that because it covers less conditions, it's a little bit more budget friendly. So if you have someone that understands the need of that product, but they don't have the budget to buy the CI product in all its glory, they can buy a cancer product that's a lot cheaper, but still going to provide them with the coverage that they need. Okay. Benefits on this product range from $10,000 up to $100,000 to $10,000. It's not a whole lot, but that $10,000 is still going to go a long way. That's only about $29 a month. So it's very economical for a lot of people out there. And again, very big need for this product for our MedSup clients. So talk about that. This is one of the additional values that you can bring to the table as a face-to-face agent. Another one, final expense. I alluded to this at the beginning of the call already when I was setting the stage for the MedSup as a door opener product type product. The name of our product is Living Promise. And let's be honest, there's a lot of people out there, maybe they didn't save as much during their working years as they would have liked to hope. And now, this is kind of a morbid conversation, but maybe they get diagnosed with something that doesn't give them a whole lot of time left to get their affairs in order. Final expense is a product that can be used to cover a lot of those needs. What does a funeral cost these days? Probably $10,000, $12,000. Even a cremation, I think, is like $5,000 or something like that. I mean, these are very expensive needs, and that's precisely where a final expense product can fit in. Okay, our benefits on this range from $2,000 up to $40,000. And something that's really good that the Mutual of Omaha product brings to the table is this thing called a graded benefit option. What is that? Let's say you have a client, they see the need for it, but they really don't have the budget in mind, or maybe there's something that, they're worried about buyer's remorse right after the policy issues. What the graded benefit option does is that if they pass away within 2 years after that policy is issued, it's going to pay back all the premiums. So they really have nothing to lose at that point. And in addition, it's going to pay an additional 10%. Okay, so great option there. That's something that the Living Promise product from Mutual of Omaha is going to provide. Okay, and then this product, and I skipped it on the CI product, simplified underwriting, and then Express for the lower face amounts. Express, it's just the knockout questions on the application. If they say yes to any of those, they're not eligible for coverage. Simplified, same sort of deal. There's only the addition of the farm check, the random telephone interview, and the MIB. That's the other one. Okay. Same thing with the final expense. Simplified underwriting for that product as well. And then the final one I have on this sales idea is dental insurance. Dental insurance is a very good one to talk about with MedSup clients. This is far and away the most popular ancillary sale for good reason. Medicare doesn't cover dental or doesn't provide dental benefits for the most part. If your client's getting some sort of like dental surgery while they're admitted into a hospital, yes, Medicare will cover that. But we're talking about everyday dental insurance needs. We're talking cleanings, we're talking fillings, dentures, any of that sort of thing. Medicare does not cover that, okay? And if Medicare doesn't cover it, the supplement's not going to cover it either. They need a standalone dental insurance policy, okay? And we're really excited about this. Mutual of Omaha is really excited about this because for a long, long time, we did not offer a dental product. We first rolled this out in October of last year, so it's something new. Hopefully you've taken a look at it. We're really excited about this product. A couple things to talk about here. We have 2 plans on it. Again, we're not going to dive into the weeds on this one either, but just really quick, we have 2 plans. So there's one that runs about $35 to $40 a month, and then one that runs about $50 to $55. From a competitive standpoint, there's a few things I want to highlight real quick. Both of those, even the cheaper version, there is no waiting period on either preventive or basic services. There's a 12-month wait on major services. That's things like, dentures and some of the more pricey dental surgeries. But for cleanings, for fillings, anything like that, day one, once they have that policy in their hands, they go in and get that service taken care of. This policy will cover that, okay? So there's no waiting period on either the preventive or the basic services. So very excited about that. And then also both plans also cover implants. You see implants are recommended more and more these days. Both of our plans that are available within this portfolio, they're going to cover implants as well. So very excited about that as well. And then finally, available on a GI basis. So if your client sees a need for this product, they like the price point, they say yes, well, boom, you got yourself another sale right there on the spot. So it is a very easy product to pivot to. And again, like I said, very popular with the senior market, with MedSup policyholders. Not a lot of dental coverage provided with Medicare and Medicare subs. So definitely talk about dental as well. Switching gears here, Plan G. So Plan G is our most popular plan. It's one that we offer our most competitive rates on. The rate adjustments tend to be a little bit lower on our Plan G as well, just because we don't offer the full suite of GI right solutions on the Plan G either. So Plan G is really our niche product. That's our bread and butter. If you look at the market though, Plan F, clear and away, the leader, right? Why is that? Well, for a very basic reason, I'm sure everybody on the call knows this today. There's virtually no out-of-pocket expense with a Plan F. And if your client can afford it, why on earth would they ever look at anything else? Well, the idea here is that Plan G, if you extrapolate it out, you're not just looking on the surface level, 12 months out, 18 months out. Plan G, in a lot of cases, it's not always the case, okay, caveat it there, but in a lot of cases, Plan G can save your client more money, okay? So the idea here is that Plan F and G, very similar in benefits. The only difference, Plan G doesn't cover that Part B deductible, right? This year, that deductible is $183. So if they go into a Part B facility, any outpatient type care, before their supplement's going to kick in, they have to pay that $183 themselves. If you look at some premiums, and I'm looking right here on step one, some pretty average annual premiums. Plan F about $1,800, Plan G about $1,200. If your client decides to go the Plan G route, again, they have to pay that deductible themselves. So we're going to add in that $183 on top of the annual premium. Here we're looking at about $1,400 now. But again, that Plan F, because it provides more benefits, it only makes sense that it's more expensive. That's $1,800. So if we subtract the two, by going the Plan G route, again, your client's going to have to pay that Part B deductible themselves. In this example, we're going to save almost $400. That's a great solution that I think a lot of people would be open to. What are the questions you need to ask your client? First of all, are they comfortable paying that Part B out of pocket? There's a lot of people out there, they just want to buy it and forget about it. Even if the cost savings is presented to them, that's just something that they don't want to have to worry about. Okay, so that's the first question we need to ask. Are they comfortable paying that themselves? It's another ball in the air that they have to juggle. And then additionally, is that Plan G premium going to save them at least $183 per year? If the answer to both of those questions is yes, then Plan G makes a lot of sense. So make sure you're presenting that to your client. If you want to focus on Mutual of Omaha sales this year, and hopefully that's a resounding yes across the board today, Plan G is really the plan that you want to look at, okay? Very simple way to say it. Why would your client want to buy something? It's only worth another $183 when they're going to pay another $387 to get it. Okay, that's really the core to this sales idea. The next one I have is marketing MedSups to over 65 prospects. At the beginning of the call, I talked about what a great door opener product MedSup is. It's a guaranteed solution that you can present and get into your client's hands right away to grow the relationship. There's no underwriting and all of that. Absolutely, that's the truth. That's why this market is so exciting. It's very scalable, right? There's not a whole lot of commission relative to like some fully underwritten life products, long-term care, some other products out there that are more focused on the under 65 market. And that's still true. I'm not saying we don't want your open enrollment business. We want all of that stuff. But the over 65 market is one that presents a unique opportunity, even though underwriting applies. And that is that there's just not a lot of agents out there that are focused on this market. It's an underserved market. You see that in the first bullet right there. There's not a lot of competition fighting over that individual's business. And even if it's an individual that is a client of yours, that maybe you sold them their first MedSup when they turned 65 5 years ago. Let's say that person is 70 now. Well, what does that rate look like today? Make sure you're conducting annual reviews with your clients. This is some of that additional value that you can present as a face-to-face traditional agent. And make sure you're taking a look at other companies' products that maybe you can roll them over into. Help save them money. I mean, that's a great value proposition right there in and of itself. If you can help save them $20, $25, $30 a month by getting them into another company's product, and it could be the exact same plan, so there's no interruption of benefits, there's no change in benefits, you're going to help them save $30 a month. I mean, that's a great conversation point. That's a great marketing touch point that you can make as an agent, and I'm sure that's an appointment that you can get on the calendar with no problem. So make sure you're doing that. And the final bullet, this is a great way to protect your book of business. Who knows? Maybe there are other agents that are reaching out to your clients and they're trying to replace that business. Well, that's something that you can do as well, provided you're contracted with a few different carriers, right? And if your client's healthy enough to move, make sure we're having that conversation. That's a very, very strong one. This is the last slide I have, so we're going to open it up for questions here in a second. We're right about 40 minutes, so hopefully everybody's still with me. The last idea here is consider Plan N. If you look at the market as a whole, we talked about how Plan F is clearing away the leader for right now. Plan G is the number 2 solution, but Plan N is really growing in popularity as well. And if you look at it from that F and G perspective, Plan N is just another rung down the ladder. If we have some clients out there that maybe they can't afford that F or G premium, Plan N could be a very good solution for that individual. How it differs in benefits, those 2 dash points that you see there in the middle of the slide. So they may have to pay a copay for office visits and emergency room visits. You can see the price points there for those. It's a range. It's not necessarily that number, but it can range up to 20 for office visits and 50 for emergency room visits. And then Part B excess charges are not covered by the Plan N. What's an excess charge? Well, there's a Medicare approved amount for any service that's covered by Medicare and in turn by Medicare supplements, but the provider is not required to pay that. They could pay, or they could charge more than that amount. I believe it's up to 15% more. If your client goes to a provider that charges above the Medicare approved amount, the difference between those 2 numbers, that's an excess charge. If they have an F or a G, that excess charge is still going to be covered, so there's no out-of-pocket expense there. But if your client has a Plan N, they're going to have to pay that gap themselves. The good thing here is that most providers are going to charge the Medicare approved amount. So the excess charge conversation, I mean, that will not come up on a consistent basis, okay? So if your client can rationalize the fact that they're not going to be faced with this X charge scenario on a regular basis, and they see that the Plan N premium is a lot cheaper, well, Plan N may look like a great solution. So make sure you're talking about Plan N as well. And if I go back to that map, we looked at this before, but there's a whole lot more blue on it. Our Plan N rates are very competitive, okay? So make sure you're taking a look at that. And then Jeff and I were talking before the call. I forgot to weave this in earlier. But just talking about the Medicare market in general and some of the changes that are coming down the pike, Plan F is going away in 2020. Why is that? Well, there are some people out there that think that, some people don't have enough skin in the game. If your client has a Plan F, again, there's virtually no out-of-pocket expense with that product. They could have something very minor, a bad headache, for example. They want to get their money's worth on that Plan F. They know they're not going to have to pay for that doctor visit at all. Well, they can go in, they can see a physician, and Medicare and the Medicare supplement policy that they have, if it's a Plan F, it's going to cover the entire amount for that office visit. And again, some people think there's not enough skin in the game. It puts some undue strain on Medicare and the insurance company. So Plan F is going away in 2020. It's only going away for people that are aging into Medicare after January 1st of that year. If you have a client that has a Plan F today, there's nothing to worry about. They're going to continue to receive benefits on that plan even after that date. It's only for people that become Medicare eligible after January 1st, 2020. They will not be able to purchase a Plan F. Mutual of Omaha, we think we're positioned very well for this change. Again, Plan F is not our bread and butter product. It's Plan G. Plan G is likely going to see an increase in sales. And again, that's our most competitive product. So definitely think about that. Again, if you have Plan F clients today, they're totally fine. It's just for new business sales in 2020, okay? And I forgot I had included this in here, so we're going to just squeeze through this stuff really quick. First one, we do a really nice Asian incentive trip each year. It's called Mutual Sales Leaders. We're going to the Dominican Republic next year in April. Really excited about that. You can actually qualify for this trip in a number of different ways. Mets up, though, since we're talking about it, I'm just going to focus on this for right now in light of time. Qualification period is the entire calendar year of 2018. You need 225,000 production credits. What's a production credit? It's $1 of that first year premium, okay? About 1,500 average case size. That roughly equals out to 150 policies. If you're focused on our company, and hopefully you are, you really want to qualify for the trip, this is a great way that we can encourage agents to write more of our products. The second one I have is marketing credits. If you write 5 MedSup policies in 1 month, then you're going to get marketing credits. This is essentially free money that you can use to reinvest back into your business. So if you want to buy a lead list, you submit that invoice to our company. If you have an available marketing credits balance, well, you can use some of that to reimburse yourself for the expense of that lead buy. And it doesn't end there. Any marketing related expense. If you want to buy a new laptop or an iPad, because it's going to help you, grow your business in a more substantial way, you can use marketing credits to reimburse yourself for that cost. If you want to do a mail campaign, postcards, postage, shipping, anything along those lines, marketing credits can be used for that. So this is a great program. Again, this is just one way that we encourage agents to focus on Mutual of Omaha. And then the final one I have is the broker bonus program. This we rolled out in October of last year, kind of alongside our dental product. It's not related to dental in any way. This is going to pay you additional comp for your MedSup business. If you are writing underwritten business, we talked about the over 65 market. Take a look at that. $200 per application for open enrollment apps. We pay for $50. It only pays on the F, G, and N plans and for policies issued in these states. And I need to update this slide. We've extended this out to September 30th, and we're likely going to extend it even beyond that to the end of this year. But we kind of want to take a look at the analytics behind it, if it's really helping to grow the business for us. But for right now, it's guaranteed to last at least until September, the third quarter of this year. Okay, so just make sure you're focused on our states. Again, it works like the marketing credits program. You have to write at least 5 apps. You can see that in the top bullet right here. But if you do write 5 apps, just make sure you understand it pays only on these plans and for these states. Okay. So that's all that I have today. My name's Jason. It was really good to be with you today. I'm going to turn it back over. We'll open it up for any questions that are on the line.
Thanks, Jason. We've got a couple questions coming in. First, can you expand a little bit on what happens when Mutual of Omaha decides to open a new charter because of rate increases, and what kind of facilitates that as far as the increases themselves?
Yeah, so good question. There's a number of elements that we look at. First of all, and this is one that I hit on pretty hard, it's where our rate has fallen off from a competitive standpoint. But we don't only look at that. We look at the mix of business. We look at what competitors are good there. We're not always going to chase a low rate. If it's a state that we can't get especially competitive in, maybe we'll back off on that. But for the most part, we look at areas where, our sales have dropped off, where our rate competitiveness has dropped off. We'll file a new product. Once that filing gets approved by that state's Department of Insurance, we'll assign a release date. It's usually about a month or so after that. And then we'll open it up for new business sales. When that happens, we close down the old product. But from that standpoint, that has no effect on your clients. Much like the Plan F conversation that I just touched on, any clients that own the old company's product will remain in force. MedSups are provided on a guaranteed renewable basis. So as long as they pay their premiums, no fraud on the app or anything like that, that policy will always be available to people that already own it. From a rate adjustment standpoint, I would say that, as the block gets older, it only makes sense that the rate adjustments tend to, inch up a little bit. But we're always going to roll out rate adjustments that are most beneficial to our company as well as to the consumers. It's very important that we keep as many people on that product as we can. So I think there's a little bit of a misnomer out there that once we close the block down, we don't care about it anymore. We'll jack up the rates and, we don't really care about it anymore. And that's not the case. I mean, we're always going to try and keep that persistency as high as we can make it. That's very important to our company as well as to the agent that has a client on that product. we're going to try and be mindful of that as much as we can. But that's really the idea there. The whole idea is to increase new business sales where before we perhaps weren't getting any. And as far as how many we do, when we do it, we try and target between 5 and 10 states each year. Right now, this year in 2018, we've released new products in Nebraska, Iowa, West Virginia, and Kentucky. And we have pending filings right now, so we don't have a targeted release date yet. But we're looking at releasing new products in Indiana, Colorado, Maryland, and New Jersey. Those are pending with the state DOI. Don't have a release date, like I said, but once they're approved, we're going to roll those out, hopefully within the next 1 to 2 months, I would say.
Okay. With the critical illnesses, can you go over the age range? And if I want to maintain that beyond the age range, as long as I continue to pay my premiums, can I do that?
Yeah, I'm going to go back to the slide because I need to use the slide as a crutch. I'm strictly the MedSup rep. I don't run with the CI portfolio. But yeah, we'll talk about it really quick. So benefit amounts up to $50,000. Those the issue ages on that go up to 54, and then the $100,000 with the term benefits that goes up to, I believe it's 80. Don't quote me on that though. If you want to find more information on this product and some of the others that I talked about, the final expense and the dental, go onto our website, onto the broker portal. And if you don't have that handy, it's just mutualofomaha.com/broker, BROKER. And you can get all of the product info that you would ever need. Okay. You can also, download some marketing materials and that sort of thing if you want to, add that into your portfolio, as we say it. But I would do that. Check out the website, get the good product details on that, the issue ages, the benefits, how they work, all of that you're going to find right there.
All right. And Julie had a question about being able to see some of those rate increases by state and by plan. Is that also included in the broker portal there for the MedSup, Jason?
It is. So if you go up, and I'm sorry I don't have that handy right here, but go to the broker portal. On the top, if you hover your cursor over the products tab, a little pop-up box will show up. We have a dedicated page for all of our products. You will only see the ones that you're contracted for. So if you don't see one that we talked about today, maybe contact Messer and get that additional product contract set. But yeah, we have a MedSup product page, and if you go down there, scroll about halfway down, you can see the approved rate increases. It's a link. It's going to load up a PDF, but yeah, it's going to load up a spreadsheet, and it's going to show all of the approved rate adjustments for this year and last year, and it's broken down by plan and by state. Absolutely.
All right, and then we've got another question, and again, this is an ancillary product on the dental. If I were to have dental coverage with another carrier for 12 months, could that prove as proof of coverage? And that may be something we need to bring in somebody to talk about the ancillaries in greater detail. But would I also be able to find those type of answers there on the agent portal as well?
Yeah, you will. And if you're replacing coverage, I know that's one of the questions that's on the application. So no health questions. Again, it's a GI product. But yeah, if you're replacing coverage, you're going to have to, notify the company on the app, and then just, suggest an effective date that you'd like the coverage to start on. But yeah, if you're replacing coverage, that's no problem.
Okay. As far as paper or electronic applications, is moving away from paper? I noticed that you guys mentioned you get a little bit more of an incentive to use the e-app. Can you talk about how functional it is right now for the agents and any changes that may be coming to that?
Sure. The short answer on that is absolutely not. We're not going away from paper. Paper will always be available. On the dental side, we actually have, because that's a new product, we just rolled that out last year. We have a MedSup and dental combo app, and the standalone dental paper app is available as well in all states. So no worries there. If you're an old school agent and you like paper, by all means, continue to use that. We'll take the business any way we can get it. But you're right. We are trying to move our agents to using our e-application. It's just a much more efficient way to submit business. It provides live underwriting feedback if your client isn't insurable. If you answer yes to one of the questions on the application, if you're using the e-app, it'll tell you right there your client is not eligible for coverage. So it is a very handy tool, I will say that. But again, if you are a traditional agent and you want to use paper apps, it is available today, and it will always remain available as well.
All right, another question. If I'm a member of a MedSup with Moo and want to pick up some of the ancillaries, are there any discounts for multiple policies with you guys at this time?
There is not.
Okay. All right. What states is the dental policy available in right now? Do you know?
Yeah, so we are waiting on approval in, I think, 5 or 6 states. I know Washington is on that list. I don't know where everybody's dialing in from today. But I know, like, in the Southeast, Florida, I saw that area code on the screen there. So Florida is approved in. I know, Mester, you guys are out there in North Carolina. We have an approval in that state. But that's another thing. Go onto the website. We have a state availability map, much like the one I showed you for MedSup. So check that out. We're in all states, but just a handful, 5 or 6, I would say.
Awesome. Well, we're reaching the limits of our time here today, guys. I want to thank Jason for his time and his information. I'll be talking with him offline to make sure that we get enough of the PDFs and information set up for you guys that were kind enough to attend today. Just as a reminder, you can contract very easily with Mutual of Omaha through Messer Financial Group on our online contracting system. If you need some assistance with that, please call in today. Talk to one of the marketing directors or our good folks down in producer support. We'll help you get appointed and get you out in the field selling as quickly as possible. And take time to ask questions about our lead program. It's probably one of the best in the country. When you pair that with what Mutual of Omaha is offering you guys in terms of incentives, there's no reason to not sell Mutual of Omaha through Messer Financial Group. So with that, I'm going to close out and thank everyone for attending. As a reminder, this will be posted as a recording on our Messer website so that you guys can go back and review the information as needed. And also, we will be sending out PDFs and some of the slides today to thank you for your participation. Again, thank you for participating. Go out and have a great day today, and we're here if you have any questions. Thank you, Jason and Mutual of Omaha. Have a good day. Take care.